Yes, we are. It's Monday, March 20th. We got we're counting down to the FOMC on the 22nd, which is going to be Wednesday. It looks like tried and true trusty 2 p.m. US Eastern will get the FOMC rate decision, which is all the hubbub in the financial world, the world of markets. It's what the Fed's going to do now that the stress and the weakness and the cracks in the system are really showing themselves as of late.
Yeah, it's
What will they
interesting.
say?
Well, it's interesting. I mean, Bitcoin's been reacting unbelievably positive to all this, which is a great sign. During the pandemic and previous times where we thought we would get initial strong price reaction to the upside with Bitcoin, we didn't see that. And now with some of these banking issues, Bitcoin has just performed awesome. I mean, you can see it's up over 28,000. I mean, this is amazing to me because, being in this for so long, only a few short months ago, we were looking at 16, 17,000 and hearing calls from all the experts for 10K Bitcoin. And now we're sitting like, how did this happen? My God, we're almost back at $30,000. I mean, it's truly amazing how Bitcoin has reacted to this. Now, you could say, it's just part of the cycle. This was going to happen anyway, but I don't think that's true. I think Bitcoin is saying, I think people are starting to wake up to the fact that they need to measure their counterparty risk in the traditional banking system. And Bitcoin, that's what it's designed to do, right? And so I think you're starting to see people that keep coming out and saying that everything's fine, everything's okay, but then there's problem after problem, right? And that's what's interesting to me is that, you know, we've been doing this for a long time. We understand that there's problems with this in the traditional banking system, and now it's starting to show up to the public. And I think our goal was to educate people about Bitcoin, and I think the Federal Reserve and the banks can do a better job than that than we ever will.
Yeah, Bitcoin was a lot of stuff. A lot of people were saying on Twitter, just for reference, it's not a unique idea or thought that I'm having here. Is that this is literally what Bitcoin was built for? Was this kind of uh, this type of situation where you're you're banking the monetary the monetary authorities like the Federal Reserve, the central banks around the world have created or our current monetary system is uh, not really designed to scale uh, the way we think it is, and that periodically it is required for the central banking authorities to intervene and inject more money into the system because of the way it's architected. And now, if one other thought that arose when you were describing briefly or just a moment ago is that in previous version of this type of financial crisis was people were like remember well two things I want to try to communicate here is that there were uh, people that were just entering the workforce. For example, they're just fresh out of college right when the 2007 8 9 financial mess started to unravel and like the repercussions really started to hit, and people were starting to realize the impact. And if you didn't own a house, or if you just bought a house like I did, you didn't really understand what was going on. I was still somewhat new to the workforce, but let me try and make this analogy or make the comparison. Is that in that version of this crisis, you had the same type of things happening. You had the leaders, the talking heads, the CEOs, the authority figures were saying everything's fine. You know, we can go back and look at history. What did the folks at Lehman say before, like days before they collapsed? What did the people at Bear Stearns say days before? And then fast forward to today, you have people that are just entering the workforce now. They're just buying their first home. They're at just some stage where this is the first time they're really like experiencing something like this. And I imagine it's probably pretty, it can be pretty like jarring and perhaps, but there's a whole like world of people that are hearing things like everything's fine. Like the Credit Suisse folks were just quoted days before that they sold for pennies on the dollar to another institution because the the tide went out and we found out they weren't wearing any pants type of situation. And I think that's a Warren Buffett says, when the tide goes out, you find out who was swimming naked or something to that effect. You can
Yeah.
Google that. But the point I'm trying to make is that like history seems to not repeat exactly, but it sure is rhyming, as some might say. And there's people in positions of perceived authority and have decision making power and influence over how the monetary system is behaving, and like acts like how liquid the system is, how much credit's available, and like where the banks are going to get their next injection of money to be able to stay solvent, et cetera, because of the way fractional reserve banking operates. And here we are again, where on the very tail end of the reassurances that we've gotten in the media, that things things have started to unravel, and then it's all happening at a very interesting time on the heels of a very aggressive Federal Reserve rate hiking uh, regime, I'll call it, or regimen of steadily a steady increase in the Fed funds rate, which has put the clamp down on like a lot of things. We'll just say it because they don't need to get into the technical specifics, because it sometimes it doesn't make any sense, and it's a process like of understanding how this works. And anyway, the point I was trying to make is that this we see what's happening. And in 2008, 2009, the run up to the GFC, the great financial crisis, is what spawned the birth of Bitcoin, or what Satoshi Nakamoto references in the Genesis block of the chancellor being on the brink of the second bank bailout, etched in for eternity into the Bitcoin blockchain. And now we have a similar situation, which is different than the COVID nightmare, I'll call it, where the financial system is, it's once again, like here we are, once again,
On the
the
brink.
curtain has been, yeah, we're on the brink. The curtain has been drawn back, and we can see uh, it's exposed once again for everyone to see, the like a house of cards and the fragility of the way the system is architected. And again, there's lots of money being created out of thin air, being put into the system to prop up the infrastructure, the banking infrastructure. And this is what Bitcoin was built for, as
Yeah,
many
yeah.
others will say. It's not, and that's not a unique idea coming from me. So anyway, that's
And
what I wanted to contribute to this part of the conversation.
no, 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 that was great. Yeah, it was interesting. I first started working in 2007, and I was working in real estate. And in the brief time I was working and before 2008 happened, it was enough to see that the world changed in 2008. After 2008, the world became a different place, right? Especially financially. Sorry, my phone was going off like crazy. Yeah, so in
Well,
a way, I feel fortunate to have started my career essentially at the great financial crisis, right? Because it really opened my eyes to, hold on, things might not always be the way they've always been, right? And so I didn't learn about Bitcoin until 2014. I didn't do anything about it until 2017, but uh, it's been a journey in and of itself to, and what do we always talk about, right? If you never buy Bitcoin, that's okay. But what we really want people to do is learn how our money works, because if you do that, all roads lead to Bitcoin. And I think that's what we're starting to see happen, and it's reflecting in the price action. Now, on a day to day, week to week, month to month basis, it's not going to go straight up forever unless buy into the other thing that happened over the weekend was Balaji made a bet that a Bitcoin will be, at $1 million in 90 days. Okay. And so you can look that up and kind of go through that and decide for yourself. But I think there's a lot of interesting things happening. And I think we can kind of shift into, pulling up this chart and taking a look at Bitcoin's price action over the last, I've got it since I think this was in June or July of last year. And we've just kind of,
yeah, the FUD cycle was strong last year. There was a lot of, I don't even know what to call it, type of media coverage. Really, uh, I mean, I don't want to sound too much like a conspiracy theorist, but a lot of targeted hit pieces concerning Bitcoin's energy consumption, that it's backed by nothing, it is a Ponzi, and you got Jamie Dimon saying that how do you know that it's only limited to 21 million, how do you know Bitcoin's fixed supply is fixed? And it just people at every level of government, every level of the financial industry or the banking business. Well, we're we're saying that this thing is a pond, this thing is this thing is that, it's bad for you, it's bad for the environment, and just like FUD. And then you get to the near the end of the year, and the FTX house of cards finally topples because these clowns. I mean, golly, I don't even know what to say about that other than what. And then we see finally at the end, near the end of the year, uh, it was, I mean, I guess the silver lining perhaps with the price action last year is that if one was so inclined, and because it is still legal, is that you could tax loss harvest your position. And lo and behold, I think that's probably what happened to some extent, uh, to people that understood that the fundamental case, the base case for Bitcoin hasn't really changed. It's just, or I mean, not hasn't really, it hasn't changed, period. That's not, I want to make that very, very clear. The base case for Bitcoin hasn't changed. Its fundamentals haven't changed. The mathematical guaranteed scarcity hasn't changed. The All that's happened in the last year is that the mainstream media, because it was in their best interest financially, were willing to take the risk of publishing all kinds of nastiness. And then the raising rate environment pushed things to the brink, and here we are. FTX collapsed. All of the other, not to, I'm leaving out a bunch of really important things like the Luna issue and all, like Voyager, Celsius. I mean, golly, you go back and look, and the point I'm trying to illustrate here is that the price coming way down into the 15, 16, $17,000 range, all it has done really is create a really great buying opportunity for those who understood the fundamentals of what we understand about Bitcoin and what the promise is. And lo and behold, at the beginning of the year, looks like people decided that the risk reward from a trading standpoint was in their favor, because the price had come so far off the highs that it was worth flipping their bias to long. And we see that in the price action here, is that we started the year at what, 16,000 and some change.
Yeah, yeah, and
And
I mean, it's gone almost, since the beginning of the year. I mean, you got to remember too, at the beginning of the year, again, this is why it's important to control your emotions, because everybody thought we were going lower. Everybody. I mean, this wasn't like, nobody had this action in their cards, right? Everybody was convinced it's over.
mhm.
Bitcoin's screwed as long as they keep raising rates. Well, they've kept raising rates, and what's happened? The price has gone up. So that goes to kind of one of my theories that, like, look, I don't think higher interest rates are going to deter people from owning an asset that, compounded annually over a 5-year period returns 150%. People are still going to want growth, right? And they're also going to want a way to remove the counterparty risk of the traditional banking system, right? Because you don't have to have your money in a bank, right? That sounds silly to say, but like it's one of those things that people don't really think about. It's just the default nature of the current system is, oh, I've got some money, I'm going to put it in a bank. Well, that hasn't worked out great for everybody this year, right? Like, so outside of government backstops, Silicon Valley Bank, a lot of people would have lost a lot of money having their money in banks.
That's right. And a good, probably or I find it interesting. I don't know if it's good or it's anywhere. It could be anywhere on the spectrum between like really bad and really great. But what I'm trying to illustrate here is that history has a lot of good lessons about or it tells a story, a good story, in my opinion, about how things change, and there's boom bust cycles in the world, and there's gigantic, um, like world changing events happen that are out of everyone's control. And there was a time when taking cash out of the bank and holding it on your person or in your house, or the proverbial stuffing the cash into a mattress, like a mattress full of cash. There was a time, believe it or not, that people, individual citizens, didn't have faith in the banking system to the extent that they were willing to take the risk of taking the cash out of the bank and hoarding it literally in their house, in their mattress. So there's all kinds of risk that comes with that as well. And one really great or very simple example is that the reason you don't walk around with a bar of gold is that someone can take it from you. They can knock you in the head, as my grandmother used to say, and take it from you. They can break into your house. They can break into your car. It costs money to hire security guards and to transport it safely. And there's risk. But at the same time, what was risky? What I'm trying to say is that there was a time when it was riskier to have your money, your cash, your US dollars in a bank, because if the bank went, there was a bank run or the bank went out of business, you lost your money. And here we are 100 years later, or 90 years later, or whatever the time frame is. And money money is fundamentally a little bit different, like meaning our dollars are now digital in the system. They're not 100% digital just yet. I think that's where we're going with this, or I think that's where the authorities want to take this. But the point I'm trying to illustrate is that if we wanted to go take our dollars out of the bank today, we would go to the bank branch, assuming that it was open, and then we would say, "I'd like to withdraw my cat," and they would provide us with paper dollars, and they would deduct the digital balance from our bank account. So, and the ledger still acts the same at the bank. It's just now it's computerized. So there's subtle differences, but the root issue is still the same. Is that if you are afraid, if you are feeling fearful that the bank, the commercially, the private business that is your bank, it may be a publicly traded company like a JP Morgan, or it may be a small regional bank that's just a private enterprise that somebody started that business, just like I can go start a lemonade stand and I can incorporate. I could also, if I checked all the boxes and did all the things, I could start a bank and I could accept deposits from people, and I wouldn't have the same protections that the other banks have, because I'm not systematically or systemically important or vital. I can go out of business just as easily. So I think there are people that are still alive today that have been through several of these crises and are, just as, I guess, frustrated and worried about the robustness and stability of the banks themselves now as they have been in the past. And those of us that haven't lived through this don't really understand. So it's this constant, like, it's just the cycle of people discovering how the banking system works every
Well,
day of the year for the first time.
that's the old saying, time is a flat circle, right? Like that's essentially what's happening here. And I pulled up the chart from our good buddy Rec Capital, who we enjoy. Everybody should follow and subscribe to his work. He's fantastic. But as you can see, the Bitcoin's finally broken out of the downtrend, which this is based off 4-year cycles, right? And again, history doesn't repeat, but it rhymes, okay? And so, based off his work, we've broken out of the downtrend that started in November of 21. And when that
Hmm.
happens, historically, we've entered into the beginnings of a new bull market. Fancy that this coincides with everything happening in the banking sector, right? And so you can make correlations, but if you took all the banking stuff away, this chart would look probably very similar whether that existed or not, right? And so one of my thoughts and theses on Bitcoin is Bitcoin's going to do what Bitcoin's going to do, regardless of everything else, right? Like you can superimpose whatever news you want over this chart, but I think in the long run, Bitcoin is going to do what it's going to do outside of all the news events that have happened, right? And so that's something that I kind of think about when I think about the space is that say whatever you want, right? Like the news events do affect the price, but as you alluded to earlier, Bitcoin hasn't changed. The fundamentals are exactly the same, right? No matter what's happened in the world, Bitcoin continues to operate as it always has. The only difference is there's more computers competing for hash power now. There's more wallets. There's more use, and so over time, I think that we can talk about banks until we're blue in the face, but Bitcoin's going to exist regardless of what these banks do, right? And that's something for me. I've stored the majority of my net worth in Bitcoin over the past 6 years, and I can say that after an 80% downtrend these past couple of years, I was still up 5 or 6x from when I started, right? And that's something that I couldn't have done leaving the money in the bank. So as hard as it is to ride through some of these downtrends, it's still a better alternative than just having cash sitting in a banking account. And so that's something that I've seen happen personally, and that's why I have such conviction in the space.
Yeah, the Bitcoin is going to do what it's going to do. Like I think that was really really important the way you said that. The other thing I want to add to this, so looking at the Rect Capital chart still, is that there are big macroeconomic trends and cycles that happen whether them to happen or not. And there's the point I'm trying to illustrate, the saying that I'll say this again and again and again, is that if you don't do macro, macro will do you. And what I'm trying to communicate by saying that is, if it's these big macro trends that are playing out over these longer periods of time, there's lots of like price action and volatility inside these trends. So like when during the macro downtrend, there was lots of ups and downs and ups and downs and ups and downs and ups and downs, but the overall trend was lower during this part of the cycle. Now, I think it's interesting, and I don't know if there's like some conspiracy or whatever, but it's interesting to see that as the so zero interest rate policy, ZIRP, as that is now come to mostly an end, or at least temporarily come to an end, with Fed funds being over 4% now. But the other macro conditions have aligned, that there's stress in the system, there's institutions are failing, and the current like rising rate policy stance or posture is now likely going to get walked back, and it's coinciding, and it's confluence. The point I'm trying to get here is that the confluence suggests that we're breaking now. The pendulum swung to one end of the spectrum, and now it's going to start, allegedly, not I can't predict the future, but allegedly based on price action, and the trend is now going the other way, and it's become viable for people to, in large numbers of people around the world, to start allocating in Bitcoin because of the macroeconomic forces that are in play that are out of their control. So they're just trying to get
Yeah,
in the way.
yeah, and the 4 year cycle, narrative is something that we analyze a lot and use as a framework. Now, there is something else that exists outside of Bitcoin, and it's a normal business cycle, right? And you can use the ISM, which is a measure of manufacturing, and the typical, and it's also tied into you know Chinese liquidity, right? And I don't have the chart pulled up, but you could also argue, and a lot of people are starting to make this argument, that Bitcoin price action is also tied to the business cycle, which is approximately 3.5 years. So you know those are things to kind of analyze from a macro perspective if you're looking long term on Bitcoin. But I do think it's interesting that there are frameworks to use. It's not like Bitcoin price action just operates in a vacuum, right? Where there's, even though I do believe it's going to do what it's going to do, irrespective of everything else. Uh-oh, we lost Ted. He gone. All right, let's see. But yeah, that was the point that we were trying to make anyway. I wanted to bring something else up that I thought was kind of funny, as you're talking about alternatives to Bitcoin and potentially buying gold or silver, that China just discovered a new deposit worth $3 trillion worth of gold, right? And that's just not something that can happen with Bitcoin. There's a fixed supply. There's 21 million. There's only ever going to be 21 million Bitcoin. But as we've alluded to in the past, they could find more gold any day. And there's also, yeah, I can hear you, Ted. I can't see it though. Let's see here. Yep. Hold on. I'm trying to get Ted back on here. That's not what I wanted. Wonders of the internet. All right, link sent. He should be hopping back on any second. Yeah, but I wanted to bring this up about discovering gold deposit worth $3 trillion. I mean, that's just never going to happen with Bitcoin. Now they still got to do the work to get it out of the ground and bring it to the market, but when you talk about a finite supply of something, I mean nobody on the planet knows what the actual supply of gold is, right? It's what's going on? It, uh, I cannot see. I don't see where to bring you back in here. Well, that's all right. I mean, we can wrap it up here. I mean, essentially done anyway. So I'll close it out and then. All right. Well, we're having technical difficulties here. We were. It was a short one today anyway. I just wanted to bring this up and talk about the fact that you know the ultimate supply of gold is unknown in relation to Bitcoin supply is known. It's 21. It's 21. Yeah. It's 21 million, and it's never going to be anything else. So on that note, here's another tweet from 941 who calls themselves Pigeon, which is one of the funny things about Twitter. He provides a lot of analysis too, but he put a post today, said JP Morgan CEO Jamie Dimon calls Bitcoin hyped up fraud, expects Satoshi Nakamoto to increase BTC supply. That's not going to happen. Like, that's just not going to happen. And so these guys get up here and say these things, and Jamie Dimon knows how Bitcoin works. It's a direct threat to his business, right? And so he's not going to say stuff that's positive to Bitcoin. Let's see, sorry, I got Ted on my in my ears, but he's not on the screen. Oh, it's still nothing. But so anyway, we'll wrap that up today. They found $3 trillion worth more of gold. They're never going to find more Bitcoin. So keep that in mind when you are analyzing different options to take